Good morning, everyone. My name is Nell Cordick with Bogart Wealth, and I wanted to welcome you to our latest seminar around long-term care and long-term care insurance. We are glad to have you join us today and very much appreciate your involvement. I do want to let you know that I do have the chat box open and the Q&A box open. So if there are questions throughout the presentation, please feel free to text in a question and I'll try my best to answer them along the way. And if not, at the end of the presentation. So we look forward to having an interactive presentation and certainly available to answer any additional questions for you. Before we started into our discussion around long-term care, wanted to just take a few moments to talk about Bogart Wealth. We are a registered investment advisor firm. And what that really means in terms of what it means to you as the client is that we hold a very high fiduciary standard to always act in the best interest of our clients. We are an independent firm. We use institutional custodians, and what our platform is Charles Schwab presently. And we also work with complex portfolios that really are customized for your specific investment need. So what does fiduciary actually mean? And this slide really gives you an overview of some of the key areas, and a couple that I wanted to point out that I feel are very important is, first of all, it always puts the client's interests first. Secondly, as a fiduciary, it's very important that we provide full disclosure, that we are very transparent, that we explain fully what our fee structure is. We want to make sure that we're always acting in good faith with our decisions alongside our clients, and that we intend to never mislead our clients. Our firm is made up of quite a number of individuals. We actually have a group of financial advisors that are really the face with our clients. In addition, we have associate financial advisors that work alongside our financial advisors in terms of working directly with our clients. And then we also have our support with an in-house portfolio management team, an in-house financial planning team, our operations team that really takes care of the day-to-day operations of our clients' accounts. And through that whole process, we all work very collaboratively to really make the client's experience a very positive experience at whatever stage that the particular client happens to be in. In addition, we also have a tax team that we work very closely with. They are independent of Bogart Wealth, but they work very closely in terms of helping us to work with clients as they have decisions that they need to make that will have tax consequences. We have the ability to bring in our tax team to actually offer assistance and opinions on different strategies that may or may not cause tax consequences. We also currently have 3 locations convenient for you as the client. We're located in McLean, Virginia, just outside of Washington, D.C., and we have 2 offices in the Houston area, one in Gesner and one in Hughes Landing in the Woodlands. So our firm, we really are a holistic firm that focuses on not only investment management, that certainly is the core of what we do with our clients, and that we are very specialized in what I would consider an expert, but we also work with our clients in many other ways. And I think that's what makes Bogart Wealth unique, is we are independent, and that's very important to note. We will work specifically, as we talked about, around specific financial planning strategies. So we do comprehensive planning. It includes NUA analysis. It includes pension lump sum versus annuity analysis. It regards cash flow planning, which is critical as people are planning to go into retirement. We specifically focus on Roth conversion strategies, whether they be conversion strategies after you're retired or using mega backdoor Roth strategies before retirement, and really focused in on very customized retirement planning. And in addition, we also, as I mentioned, have an overlay of tax optimization and preparation strategies, as well as discussing estate and multi-generational planning. I would like to certainly mention to you that we do offer a financial strategy session. If you are new to Bogart Wealth, if this happens to be one of your first seminars, we do welcome you to have a one-on-one conversation with one of our financial advisors. It's simply, there's no cost, there's no obligation, but I think you will see that some of the discussion that we will bring to the table is very beneficial and are things that, regardless of what stage of your financial life that you happen to be in, it's very important to talk with a financial advisor and to really be thinking of all of the steps that are in front of you that you have to make financial decisions around. This particular topic today, the long-term care planning, is only one in a series of different retirement cash flow optimizer series of webinars that we actually do. Some of the different topics that we currently have are retirement planning, retirement income, Social Security planning, tax planning, and we'll be doing a 2021 change very shortly, estate planning strategies, NUA strategies, mega backdoor Roth strategies, as well as other types of IRAs. We welcome any request of different seminars that you may have a topic that you would like us to see a focus on. We are constantly updating this list and like to have it refreshed. So we certainly welcome any additional suggestions from you. So today's agenda, we're going to talk about what is long-term care, what are the chances that you would need long-term care, what are some of the costs at this point in time that we look at regarding long-term care, what are some of the ways that you can pay for long-term care, and do you need long-term care insurance, and what does that entail and what does it cover as well? So we hope to cover all of these particular topics with you during today's session. So the first thing is in terms of looking at, will you need long-term care? So many folks today have aging parents, and we are starting to realize how many of our parents are actually needing some type of long-term care. And really statistically, it is showing that about 70% of people that are over 65 will probably need some level of care. And it can range from very minor to very skilled. So realistically, you're looking at 7 out of 10 people are going to need some type of assistance at some point in their later years. So basically, what does that mean in terms of when would they need that care, and what does it really mean to say that it's truly a long-term care need? So there's several definitions that are recognized. First is the inability to actually handle basic activities of daily living. The second is that the person would actually have a severe cognitive impairment that requires constant supervision. And so those are really the two basic components that define is long-term care necessary. And then, as I said, there are different levels. And so it really can go from needing just basic, some assistance with personal care, going into kind of an intermediate where there may be additional assistance, but not necessarily 24-hour. And then there's skilled nursing care. So that really can be quite a number of levels. But if you meet one of the first two criteria, meaning the inability to handle the basic activities of daily living or the cognitive impairment, then 3 levels of either of those components. And so really in terms of what are the activities of daily living? So the 6 that are recognized are bathing, eating, dressing, toileting, transferring, meaning being able to move around, and continence. And so if 2 of those need assistance, then that actually qualifies the person as needing long-term care assistance. So basically, in terms of a cognitive impairment, is something that is defined as you needing supervision to protect yourself or others from danger. And many times you think of this as being Alzheimer's disease, a brain injury, a severe stroke that it leaves you in a situation that cognitively you may not be making the best decisions. When you're thinking about where you can receive long-term care, it really can be just about anywhere that you're living. So many times, most people will want to stay in their home as long as they possibly can. So that's the first place that you would require care. Sometimes it can be just a person coming in for a few hours a day, but it could bring in a skilled nurse into the home. Sometimes it can be an adult daycare center. They are becoming more and more popular these days, where you have the ability, especially around some of the cognitive impairment, that in the early stages of Alzheimer's, the adult daycare centers are becoming much more prevalent for a socialization for people that are suffering from those type of diseases. Assisted living is when someone needs some care, but may not need a full skilled care. And then regarding nursing care, nursing home is typically skilled nursing care. And then hospice facility is obviously towards the end of life and needing, really care to take you into that next stage. So how long is long-term care? And many times when we are actually doing financial planning projections, you never know, and it can be very different for different individuals, and it can also be very different for whether it's cognitive or whether it's some type of a more like a physical impairment. And so, but on average, if someone is receiving care at home, you're typically looking at somewhere between 3 to 5 years. If they're actually in assisted living, then probably somewhere in the neighborhood of 2.5 to 3 years. And if they're in a nursing home, typically it can be a short stay up to about 2.5 years or so. It is not uncommon for someone to actually pass through all 3 of these stages. And that's one reason that a lot of times when people are looking for what type of facility that they might want to go into at some point in the future, they actually choose a facility that offers all, home care is obviously different, but that offers assisted living, nursing home, as well as independent care, so that the person can be in one place, their familiar surroundings, but they can graduate within the same facility to different levels of care. So that is something that is very, very common. Another thing that is a suggestion that we try to make is that you never know when you may need long-term care. And if you know that the community that you're in is where you're going to be in the event you needed long-term care, or you think you might be going to one of your children's communities to live, and at some point you may need long-term care, it's actually a good idea while you're very healthy and very active to actually tour some of the different facilities, because if you can already, while you're very healthy, make a decision on which facility that you think you would lean towards, it really helps your loved ones when that choice needs to be made later on in terms of what your wishes may have been. So keep that in mind, that can be a really good exercise to do a tour, looking at it from your perspective of what you think you would be comfortable in, and then certainly communicate that to any of your loved ones that may have to make or help make that decision at some point in the future. It can make a big difference for them long term. So basically, cost of long-term care, as we know, all healthcare costs have just risen exponentially over the last few years. And even though in this particular projection, we're saying costs rising at an average of 3% per year, they would double in less than 25 years. We actually think they will escalate much faster than that, and they certainly have shown that in the past. The baby boomer generation is just now starting to really use some of the long-term care components. And that is a huge generation that is going to need more and more long-term care, and that which is going to require more and more facilities. And so the cost we do think is going to continue to escalate. But hypothetically, in terms of based upon the 2019 monthly cost, what you're looking at in terms of, when you think about nursing home care, you're easily looking at something around, for a private room, $8,500 a month, so a little better than $100,000 a year. And this is kind of a national average. The more that you're in a major metropolitan area, these costs actually escalate. So, costs that are inside of a major metropolitan area are going to be higher than in some more rural areas of the country. Assisted living is about half of that. Adult daycare is certainly a little bit less than that, but that really is you're taking for a few hours, dropping off and picking up. And then home health care can actually rival your nursing home care depending on the amount of care that you need. But obviously, you're getting very individualized attention in that regard. And so that is something that you're looking at willing to pay for. And to be able to stay in your own home, you're getting very individualized attention. And so just to keep that in mind, that this kind of gives you a cross-section of approximate cost that you could be looking towards. Quite honestly, when we are doing planning, financial planning for clients today, and we're forecasting what types of costs that long-term care could be, say, 25 years from now, we're projecting somewhere in the neighborhood of probably about $225,000 a year for true long-term care, because we just take the effect of inflation into those numbers. So really in terms of, and this just projects out for, we kind of pulled out Texas as one example of just kind of giving an idea of what some of the services, and when you think about what the cost can be over 3 years, and this is really just basically looking at some of your assisted type of living. This is not even totally full skill nursing, that over 3 years, you're easily looking at, in today's dollars, around $154,000. So it does certainly escalate quite a bit. So basically, when you're thinking about long-term care experiences, you want to think about, first of all, who pays for the long-term care services. So your choices are really, first of all, through private insurance. Secondly, your personal assets or assets of your family. Third is, what component does Medicare pay? Fourth, what component does Medicaid pay? And then fourth, again, your long-term care insurance specifically. So first we want to look at who pays for what in terms of just the overall average of the long-term care costs today. Is that between, and this is across the cross-section of data. Now, this is dated a little bit going back to 2017 because some of this data just takes a while to update. But basically, through Medicaid, public assistance, Medicare is right now making up about 70% of all the long-term care. Out of pocket is about 16%, private insurance about 8%, and then some other type of private funding about 6%. So when you think about medical insurance, that is really going to only pay for the skilled acute care only. So it's for very limited time and for very limited purposes. It is not designed to pay for long-term custodial care. So in terms of when you're getting into the long-term custodial care, it really comes down to personal income and assets. And so what that may do is it really could affect what your overall savings that you've worked really hard for, how quickly that can deplete. The previous slide, when we were showing just assisted care needing, over $50,000 a year in addition to whatever your other expenses are, can very quickly eat into your retirement savings. And it's just an important consideration. The other thing that you must really think about is long-term care is just not about the person who needs the care. It really affects the entire family. And so it's really important to take into all of the considerations of what it does. So typically when you have a household that has two spouses, if one spouse is sick, then typically the other spouse is healthy. And so you want to have a situation where you've got assets or the wherewithal to be able to provide for the sick spouse, but also so that the healthy spouse can continue living in the lifestyle that they have grown accustomed to. You also find that the caregiver, it becomes an emotional, a very emotional component that the caregiver, whether it be just one spouse or whether it be children and other family members, it's very emotional. And therefore, kind of keeping in mind the ability of having someone come in to give a little bit of a break for the primary caregiver, utilizing the adult daycare types of things can really have an impact and give that healthy spouse or the caregiver a little bit of a respite there. In terms of when you are thinking of paying for it out of pocket, certainly when you are paying for your care directly, it gives you total freedom on the choice. So you can choose what facility, you can choose what everything is your choice. Whereas if you're using some type of public assistance, sometimes your choice is not necessarily defined for you. However, in order to get that choice, there is a trade-off. So typically, if you're paying out of pocket, you're using your own assets. It limits your ability to pass those assets on to family members. And also, if you happen to run out of money because you're paying for your own care, then you're going to be forced to rely on family members or the government for future options. So it's just an important thing to always keep in mind. So let's talk a little bit about the government, where the government assistance plays a role. First of all, Medicare is the federal health insurance that provides limited coverage for long-term care insurance. So basically, they pay for cost after a 3-day hospitalization. They will pay for the full cost of skilled nursing care for only 20 days, again, after that hospitalization. And then they'll pay partial cost from day 21 to day 100. And then after day 100, they don't pay anything. So it's just an important consideration that we think Medicare is going to cover a lot of things. And it does cover when you've got normal medical situations, but once you're in a long-term care facility, it really stops the coverage completely after 100 days. It does not pay for personal or custodial care, and the home health benefits are very limited through coverage through Medicare. So in terms of when you're thinking thinking about nursing home care, then we want to kind of think about what is Medicaid. So Medicaid is typically the joint federal state program that really pays for long-term care expenses. So currently it is paying for approximately 49% of all nursing home costs that are out there. But Medicaid is also very much of a means-based. And so in terms of you have to show that you have need in terms of before you can actually apply for Medicaid. And so that means that most of your other assets have been depleted. I've got a question also. Does the time frame for Medicare coverage restart if you re-enter the hospital for a period of time and then return to the long-term care facility? So typically, and this is where it becomes somewhat of a game, and I don't mean to say that in tongue in cheek, but doctors understand how this whole Medicare thing works. And so typically, there will be, every time there is a new diagnosis, it will start the clock ticking again. So if you have to go back into the hospital for something, another diagnosis of some sort, it will then click Medicare back on again to cover for the next time you have to go to the long-term care facility for the next 30 days. But obviously at some point in time, those reasons that, that become somewhat limiting, but it will work for several times going in and out of a facility. It's just that they have to be very careful. It's got to be true conditions, but different reasons for the hospitalization will trigger Medicare turning back on again. So going back into the Medicaid is, first of all, every state establishes its own eligibility criteria. So that's really an important thing. First is to investigate, based on the state that you live, what is the situation in your particular state? What does it cover? When does it cover? What does it allow you from an income standpoint? And what does your state allow you from an asset standpoint? And so there are typically income caps that will apply for you to be eligible for Medicaid. And then in addition, there are asset limits that will apply. So typically, if you think that there is a situation where a spouse is going to possibly need long-term skilled care nursing, which is going to be very expensive, you will find that people will try to figure out ways to get assets out of that particular individual's name. Now, this can be very tricky because they typically have look-back rules that you can't just say, okay, I'm going to give away all my assets today, and then I'm going to go into Medicaid and they'll cover everything. So you do have to be very careful with that, and certainly seek the advice of professionals when you are trying to do that. But it is something that is certainly involved, as people are realizing they're going to need extensive care and need to get assets out of one of the spouse's names. So some assets are not counted in this asset limit. So first of all, your house is excluded if your spouse is still living. They know that your spouse needs a place to live. One car is excluded. Basically, your household and personal belongings are excluded. And then any type of term life insurance is excluded, as well as if you've set aside for burial and funeral expenses. So in terms of sometimes, and one strategy has been as far as utilizing funds that are in, that are in your name to purchase assets that don't count. So for instance, in terms of some type of a life insurance policy, that could be a little bit tricky, because to qualify for a life insurance policy after you know that you're going to have a long-term care event or a long-term need may be very hard to actually qualify. Secondly is transferring assets into an irrevocable trust, because then they're no longer in your actual name. They've been gifted to an irrevocable trust. Therefore, they would be excluded. And then gifting assets away. And so, so those are some strategies. And so first of all, by really thinking about Medicaid, then you're certainly looking to say, okay, how do I make sure that I can qualify for Medicaid as soon as possible? How do I ensure that I'm protecting the assets for my healthy spouse who will continue to live for much longer? Or how am I preserving assets for loved ones as well? So really, then you have to think about what are the drawbacks for utilizing Medicaid benefits. First, what I've described is certainly it is very problematic ethically. And you have to really look at it, everyone has very specific beliefs around this component, and it's just an important consideration that you're comfortable with, with what strategies that you decide to employ. Once you've also gifted away assets, you have given up the rights to those assets. And that's also very important. Once you've given them away, you no longer have control. And then thirdly, which I mentioned before, is Medicaid laws are very complex. And you've got to be super, super careful to really talk with if you are employing some type of a Medicaid strategy, is making sure that you're talking with a qualified professional that has a lot of experience in this area, because every state has very different laws, and you just don't want to take a chance on doing something that could totally be undone at some point because things were not complied with. So this is an example of a kind of Medicaid planning. Is let's hypothetically say that you did not have a spouse and your house is your main asset. So basically your fair market value of your house is $400,000. If your average cost of nursing home care in your area is $4,000 per month, then technically you would have to wait 100 months before you could get on Medicaid, because they would look back to say, okay, the value of this house would have been used for your care. And so therefore you cannot be on Medicaid for 100 months. Now, sometimes they won't be quite this specific because, but I've kind of given you a large example to give you a reflection of that. But they certainly do look back to determine if you've given away assets, then how long could you have to wait before you're eligible? So then another strategy that has been talked about a lot these days in terms of especially to help with long-term care services are reverse mortgages. And so what a reverse mortgage does is it first of all allows you to stay in your home as long as you can. It takes away you no longer have any mortgage payments to make. Instead, the mortgage company is paying you, and it can be set up that it's paid as lump sum, or it can be paid on a monthly basis. But basically, you receive money for the equity in your home. And what happens is when you vacate the home, or when it is sold and vacated, is when the loan is repaid. So the pluses of doing this is it's a way to actually utilize your home equity while you're still living in the home, and also you're not having to pay any type of loan back for it. The negatives are typically the costs that are associated with doing a reverse mortgage are kind of done at the back end of it. So it's almost like they are taking all of the interest charges and putting them at the back end. So when you repay the loan, you're also repaying all of those interest charges, all of the fees associated with the mortgage, and some of those costs can be pretty exorbitant. So again, this is another place that if you are looking seriously at doing a reverse mortgage, is to really make sure you pick the right professional that truly understands it and is ethical in the way that it's structured. Pick the right company to put this together, because again, I've worked in lots of different areas. I come from a banking environment prior to Bogart Wealth, and you see lots of different mortgage companies doing it lots of different ways. And so it's just important to do your homework on this before you immediately jump in and think of this as a solution. So in terms of, then you think about, should I just go ahead and think about, if I go ahead and save all of the money today of what I may need for long-term care versus putting what I would have spent in a premium into long-term care insurance, wouldn't I be just as well off? And so what do you think about, and we've just done a very simple example of showing if we had a long-term care policy The annual premium was $3,042, and that also may be slightly outdated. So this is simply a hypothetical example. You would certainly get an actual quote from a long-term care licensed agent. But basically, hypothetically, you had a premium paying $3,042 a year. It would give you a benefit of about $150 daily benefit. It would have a compounded inflation protection and maybe giving you a total benefit of $435,804 after 20 years. So something in that regard. So then you're looking at, well, if I invested $3,042 at a 5% rate of return after 20 years, I would have $105,000. So basically, in this particular example, this is giving you kind of a first look into that leveraging that premium in a long-term care type of facility may be advantageous for you. Because again, the insurance company, everything they do is based upon actuarials. So they're looking at the law of averages. They're looking at what your ages are. They're looking at what age are typically the average age people start to need long-term care. They've got all the up-to-date statistics on how long the average is that you stay in a long-term care facility. So a lot of times they are saying, okay, this is what the benefit you would get, but in reality, would you really need this amount of benefit? Maybe, maybe not. And would you even need it at all? You may be one of the lucky ones that never needs long-term care. So it just kind of gives you a little bit of insight in terms of saving and totally self-funding your care versus utilizing a little bit of a leverage through some type of a policy. And I'll show you a little bit more of this in just a minute. So where are the benefits of using long-term care insurance? Is again, going back to that whole leverage that typically your long-term care insurance requires a premium, whether it be a monthly, quarterly, annual, or a certain fixed amount. But it requires a premium that is leveraged to give you a benefit. And so the benefit is there so that you're not having to liquidate your own retirement savings. So that's where that's a plus. It also hopefully gives you the benefit to stay in your home longer, which would give you the benefit of spending more time directly with your family. It would give you some additional financial support because the long-term care insurance would pay. It would also, typically most long-term care insurance plans also have additional experts that are associated with the particular company that you're utilizing to give you additional resources when it comes time for you to actually utilize the long-term care, and it preserves your independence. So when you're thinking of planning for long-term care, a couple of things that you really need to think about, and many times we all think about needing long-term care at the end of our lives, because that's when, it is what it is. You see people slow down, and towards the end of their lives, they need skilled nursing care. They possibly need to be in assisted living. They possibly need to be in a nursing home. And so in that kind of situation, when it's the end of your life and your spouse may have already passed away, then you know what, you're thinking it's okay to use my assets at that point. I could go ahead and sell my house and use it for my care because that would probably cover for what I needed. But the issue is we never know when long-term care is going to come upon us. And so, for instance, if something happened at an earlier age, before your assets had time to really grow where we have projected them to grow, what does that do for your overall financial situation? And what does it do for your spouse? And that's the important thing to always keep in mind, especially regarding long-term care, is if it happens earlier than at the end of life, it can be very debilitating for your entire financial picture. And so it's kind of interesting. I think, again, we all think that it's going to happen at the end of life, but statistics show that 41% of people actually start needing some type of care that are going to need it at all sometime before age 65. So in terms of the other thing that you want to think about when you are looking at long-term care types of components is think about the effect of if you have a long-term care policy that actually has some type of inflation protection. Now, they all have different bells and whistles, and so I am not at all advocating one type of policy over another or one type of benefit over another. I want to just point out to you different things that you should look for and different things that you want to investigate as you're making that decision. So the first is really an inflation protection, because as we know, long-term care costs are going to continue to go up. So typically, though, if you are adding an inflation protection into your policy, you're going to give up on something else. Either your premium is going to be higher, or if it is a hybrid policy, your death benefit may be lower. But there's going to be every time you get a benefit in a long-term care policy, there's going to be something else that's not as good. And so as you are talking to the long-term care professional or long-term care licensed agent about what type of policy you should pick, they're going to ask you specific questions about your lifestyle, about your medical condition, because they're going to want to really match up carriers to your specific needs and what is important to you. And so if inflation protection is important to you, that's where they're going to try to match and make that the best match. But it's one component that you want to take into consideration as you're considering long-term care insurance. So, and I'm going to talk about some other ones in just a second. But how does long-term care insurance really work? So basically, that's where the definition is very important. Long-term care insurance does not take effect until a certified physician has said that you cannot perform at least 2 of the activities of daily living that we discussed before, or that you need continual supervision due to a cognitive impairment. So that's the first thing that has to happen before your long-term insurance carrier will actually pay out any benefits. So the second thing that you want to look at when you're looking at different insurance policies or to make a decision on is, do they offer you benefits for at-home care, assisted living care, and nursing care? The better policies will give you the benefits in all 3. But again, it's a question that you want to ask yourself, what is important for you? But it's one thing that you do want to look for. So basically, stay-at-home benefits certainly allow you to stay in your home longer. And so sometimes the policies will also allow for more than just a nurse coming in. It may allow for help with household tasks. It may allow help with personal tasks. It may allow help with skilled aides, help with special equipment, and help with modifications. So again, every policy is going to be different, and these are important questions to ask as you're considering and weighing one policy against another. In terms of the long-term care policy, though, when you're thinking of long-term care insurance, it is not meant to be a policy that covers everything. It's meant to be a supplement to probably what you would self-pay. If you took out a policy that is going to cover all of your long-term care cost completely, no matter what, your policy is probably going to be extraordinarily expensive. And so typically we think of a policy that is going to be that will partially cover and that you itself fund other costs as well. So it would be in combination. And so when you're thinking of why would you do long-term care, and I kind of sometimes equate long-term care insurance with a policy very similar to your homeowner's insurance policy. We all have homeowners insurance policies, And we hope that we never see the day that our house catches on fire and burns to the ground or something else catastrophic. However, we all have homeowners insurance that protects against that. And if that ever happened, we are so thankful we have that insurance for the coverage. Long-term care insurance is exactly the same way. We pray we never have to use it. We pray we're never in that situation that we would ever need long-term care insurance. But if we ever are, it is the type of policy that can be invaluable. So that's really what you're looking at to consider is what it can do for you if you ever are in that situation. So the first, again, when you're looking at a policy, all of them have different components. And that's where you're going to compare and contrast different companies one against the other. And it can be vastly different from one against the other. And again, your personal feeling is going to weigh in here. So first of all, you're looking at what is the amount of the benefit payable. Sometimes the benefit it comes in a monthly allotment. Sometimes it comes in an annual allotment, or sometimes it's a lifetime allotment, and sometimes it's a combination. So you want to understand, what is my total benefit that I'm going to get? Secondly, is how long will the benefits last? And sometimes these two actually work together. So it may say, well, we're going to give you a total of $500,000 as a benefit that can be paid out over a period of 6 years at a maximum of X amount per year. If you use less than X amount, then the benefits might last 10 years, as long as you never go over the maximum total amount. So those sometimes work in conjunction. The elimination period, most policies are going to probably start at 90-day elimination. Some might be 180 days. And that's the period where, and the reason for that is, first of all, many times you will have that situation where you have a medical situation before you need to be in a nursing facility. And therefore, Medicare is going to cover the first 20 days it's in the nursing facility, and then partial from up to 100 days. And so that's the reason that you have an elimination period, is because they know Medicare is going to be there to cover that first part. And so that's where you're looking at that. And just know, again, as you're comparing different policies, whatever Medicare doesn't pay, you will be self-paying until you've gotten through your elimination period. Your location of care is, does the policy cover care in different settings, home, nursing care, assisted living? And then does it have any type of inflation protection with the benefits? Some do, some do not. Again, you weigh what the costs are if you're looking to do that. And why should you consider it now is you're never going to be younger than you are today, first of all. The costs are going to continue to escalate. And then if your health changes, that's when you might not even be able to qualify for long-term care. So that's a really important consideration as far as we never know what our health is going to change tomorrow. So there's also reasons of why would you not do long-term care? And you may say, well, sometimes there's in a traditional long-term care product, and I kind of buffer this by saying when you get into long-term care, there's the old way you used to hear about long-term care, which we called the traditional. And traditional was basically you paid a premium, and if you never needed it, that was great and you were thrilled, but you never got anything back. So traditional has changed a lot. And today, long-term care has really morphed into more of a hybrid type of component. And what that means is that typically the policies today will have something that you get back. It's not necessarily a use it or lose it anymore. It's really more of either you have benefits that you can get back the original premium you paid. There might be a death benefit, so your heirs get something. And there might be also, different, different adjustments that different bells and whistles that can also incorporate there as well. So today it's vastly different than it was even 4 years ago, per se. So I just had another question that came in, and said my mother-in-law also has a long-term care policy that specified the qualifications of people providing assistance. It only covered skilled nursing, and she only needed assisted living help. The policy wouldn't pay. This is so true. So one thing, and thank you so much for bringing that up, because I don't think I'd mentioned this, is sometimes people will say, you know what, I'm going to do a long-term care a plan, and they're going to cover it because my niece is a nurse and she can be the one that comes in and provides my care. Well, if she's not providing the care in her capacity as a skilled nurse that they would hire to come in, it may not pay. It may not pay for your daughter-in-law that would come in to help you in your home because they're not considered skilled care. So again, all of these things are so important as you're picking the policy to really understand the very specifics of what it pays and when and what it doesn't pay. So thank you very much. That was a very good comment. And so sometimes in terms of self-insuring, you don't self-insure. You do self-insure because you want to have total control. You're not worried about premium costs going up that might go up. And by the way, that is a big risk with long-term care insurance right now, is there are situations where you are getting premium increases. And so again, I'll mention that right at the end of the call. And that you really don't care what your beneficiaries may get at some point. So there's really not a necessity to create some type of a legacy. And so that is something that's okay. If you have looked at all of the different components of your financial situation and you've projected out what that long-term care cost would be, and you've got enough assets to self-insure, then do not feel obligated at all that you would need long-term care insurance. There are actually a fairly small percentage of the population that has long-term care insurance. So without a doubt, definitely know that is okay. So this is an example of one of the hybrid policies or a hybrid type of solution that I'd mentioned, is if you were thinking about, okay, let's say you've got $100,000. And so you want to self-insure, you basically, you put it into a bank CD, you hold the control, you're not paying premiums. If you never use it, it'll go to your heirs. And the question is, would that pay for your long-term care expenses? So that's really, one avenue of you would be self-insuring. Another possibility is using the leverage of a long-term care type of policy. So a prepaid policy is one type of situation where you're prepaying it. So you absolutely know what the premiums are going to be. And what it does is it really lets you leverage what the long-term care benefits are to be multiple times the premium payment. If you don't use it, there's going to be something that comes back to the children, either the initial premium or some type of death benefit. And you know that you will not get any additional premiums, but you've given yourself some type of a leverage. That's just one example of many of the different types of hybrid policies. And it's not that that's the best one. I just wanted to give a quick example. Again, talking to a licensed long-term care professional is really, is definitely the way that you want to be able to discuss that. In terms of, and again, this just reiterates that when you're looking at some type of a hybrid product, it's either going to have a money back guarantee, some type of a death benefit, or it's going to give you a leverage for long-term care benefits. It will, so in terms of basically very similar in terms of what I've just talked about, that sometimes when you're doing that type of premise that I just mentioned is it might eliminate some of the elimination period. Your premiums aren't going to increase, and you would have some choices regarding your care. So why do you need to begin planning today? Is, as we said, you're healthy enough today. If you needed to think about planning for Medicaid and you want to go in that direction, you can certainly do that. And then you also are relieving your family of the burden because you've already made decisions in terms of what you're looking at. So I've got another question that says, I've heard about life insurance with long-term insurance alternatives, long-term care insurance alternatives. Can you address these sort of hybrid policies, what to look for in such a policy, pros and cons, and who underwrites them? Absolutely. So when you're looking at a hybrid type of situation, you really look at it from two different points of view. And this is, again, where the licensed professional is going to really seek to understand, and we as your financial advisors would like to be a partner with you when you're talking to that individual, because there are two different ways that you can certainly address it. There are life insurance policies that have long-term care riders, and there are long-term care policies that have death benefits and via a life insurance chassis. And so it's really kind of a combination. Now, depending on which type of benefit that you are more focused on, is your objective more to have a bigger life insurance benefit that passes to your heirs with maybe a small long-term care protection, or is your objective to have the long-term care protection with something left over that goes to your heirs if necessary? That's really the question between those two considerations of which one you would do. They are underwritten vastly differently. There are different illnesses that you would get qualified for life insurance with the long-term care rider that you would not get qualified for a long-term care policy with a death benefit, and vice versa. So there are certain illnesses that are more inclined that you will need long-term care versus certain illnesses that they're like, okay, if you get this illness, it could be catastrophic and therefore would have a devastating effect on the life insurance component. And so you really that's the first part, is you define which objectives are more important to you. And then once you've defined that, the licensed insurance agent is going to talk with you about your medical conditions and any type of pre-existing conditions and medication that you're on. Different carriers will insure differently based upon some of those criteria. So if you've got a certain type of condition, it may eliminate certain carriers altogether, whereas other ones are like, oh yeah, we have no problem. We'll be glad to look at insuring that type of a person. You also, before you actually, get a medical approval, so to speak, that's why, again, a good long-term care specialist can really help you navigate which is the best plan, which is the best company to use, to give you choices so you have an idea of what you're really thinking might be a good decision before you make the decision to, quote unquote, officially apply. And then in terms of then what you do is you get medically approved. Once you're medically approved, we'll determine, are you standard or preferred? And again, if you're preferred, that's going to give you a more advantageous premium because your health is better. And so then you'll get, what your final options are, and you'll make the decision on truly what is the actual type of policy and the cost that you're willing to incur. So again, on the hybrid too, it's huge. The amount of choices is very large for you. You can choose where you make a single pay and that's it. And then you know exactly what your benefit's going to be. You know exactly what it can be per year or total for the lifetime. So it gives you all the details up front. You can do something where you pay as you go. And so the premium is in place in that regard. You can also choose options. Different carriers will have options where they pay you once you have been deemed that you need long-term care, then they pay you directly, or there's some policies that will only pay directly to the facility or to the caregiver. So those are all some of the different components that will be very different from one policy to another. So that is something that is very important to take into consideration. And it can be a very vast choice as far as different choices and ways that you want to look at it. And then it really comes down to your specific situation and what you think is more in line with what you're going to need at some point. So really, in terms of when, and this is where we try to be a partner with you, is the first thing is when we are working with you and we're doing your financial plan and doing your financial planning update or your projection, is, let's have a discussion around what the long-term situation might be. Let's do a scenario that shows that. Let's get an idea of, are you okay with self-insuring, or do we really need to think about supplementing with some type of long-term care insurance? And then the second part is if it's deemed that, yes, the long-term care insurance is something you want to explore, well, then let's set up an appointment with a licensed insurance agent and really have a full discussion. It should absolutely be very educational. It should be, you get kind of a full array of what different choices are. And once, in answer to the last question, it becomes very clear once you start to see solutions, which choice might be the best. And then when you're considering one option over the other, then you kind of come back around to the whole financial planning component, and we put it into the plan. And what's the premium versus what's your benefit, and truly kind of where's that best break even. As I said before, we're not looking to insure your entire long-term care need. We're only looking to supplement. And so that's important in terms of, you don't want to overinsure, but you don't want to leave yourself short either. The other part that's really important is when you're thinking about where you're going to live at some point in the future, what are the different costs in that area? Talk to your family about your plans. As I say, go on tours of the facility, decide in advance which facilities you like, so that at least your loved ones, if they have to make the choice, they know what your opinion was in advance. Compare options. And certainly once you've put everything in place, we do make sure that your medical healthcare directive is very much up to date. You want to make sure that your wishes are absolutely in line, and that those directives are up to date and current for you. So as a conclusion, I do want to say that we are certainly available to do a session with you one-on-one. Our advisors are certainly available, and we would welcome the opportunity to meet you. If you're an existing client and we have not talked about long-term care before, we certainly would welcome that to look at for future discussions. But we do welcome and we would certainly like the opportunity to meet you one-on-one and certainly offer our financial planning strategy sessions with you. An overview of kind of our firm. We've got advisors that are in Texas. We've got advisors that are in Northern Virginia, but we actually work with clients all over the country. We even have clients overseas. So we are available in terms of to really help you in lots of different settings. And just wanted to take the opportunity to say thank you very much for being with us today. And we look forward to working with you in the future.